The US dollar is once again in the spotlight with the Fed's preferred measurement of inflation. What does it actually mean for the greenback's direction? Guys, Ken Cheek both back with another fundamental update. Let's jump straight into this. Guys, before we jump into this video, I want your undivided attention to something. Now, there may be times when you're trading in the market and things are just not making sense, on the charts. You're seeing these strange moves. We suddenly shift directions completely, trends breaking out, and it's just not making sense to how you mark things up on a chart. Now, a lot of that time, and especially when you're just left there wondering and you're frustrated, your account's blowing, you just lost a lot of money, you've gone into heavy drawdown, and you just don't have an explanation for it. A lot of time that comes down to you not being aware or having the powerful tool, seriously powerful tool, economic literacy. Trading aside for the moment, it is absolutely a key life skill and set of knowledge that you must acquire in being economic literate. If you don't know what's going on in your economy, you're going to be left behind. During the period of where prices of goods and services, your living costs went through the roof, right? Inflation going crazy. That was eating into your wealth, as I'm sure you have been seeing of late, and still remains very much the case. Now, if you're aware and have the powerful tools of economic literacy that I possess, like many people in my community in TFTC possess, you can be a step or several steps ahead and still being able to capitalize and have a strong financial position. Still maintain wealth during those difficult times because you're economically literate. You know what's going on in the market. You know how to position yourself. You know how to capitalize even in those tough times. Now, that's just on domestically. There's obviously the whole world, whole global economics as well, which everything interconnects. What's going on in one economy may affect your economy as well. You have to remember that. And that is why economic literacy is powerful. And my knowledge is something that cannot be taken away from me. Okay. And this has got me to the position where I am today, where I'm able to live the life that I do, right? I've been living life here the last couple of weeks in Cuba. I've been traveling across the world, right? And it's because of my economic literacy that I have that. And no one can take it away. It's powerful and I continue to build on that every day. So something for you to think about, right? Obviously, those that are interested, I'm putting out these videos on YouTube, which you can obviously chew on and write loads of notes. But obviously, if you do want to take it that step ahead, it's open to you. Click the link below, get involved in the community, take advantage of my course, which has got hours, and it's nominal, the fees, ridiculous, okay? So you guys can check that out. All right, let's jump straight into this video now. Now, onto the dollar. It is in focus again, and you know why it's a talking point right now, because we're trying to suss out how many rate cuts and when is the FOMC going to deliver, right? That's what the markets want. That's why stocks have been pumping. They're anticipating all these multiple rate cuts from the FOMC because we're seeing potential signs of disinflation, which we'll talk about in a moment. But before I go into that, again, there's another little rant here. You see right now, I've been talking about it. I've been pressing, just pushing out little things here and there and talking about a potential recessionary bear market. Remember I spoke about the Americans, we're seeing number of people maxing out their credit cards in the United States. That coupled with high living costs screams disaster, right? If living costs and interest rates are remaining high right now from the FOMC, inflation's still high, but people maxing out their credit cards, what do you think is eventually going to happen, right? Really think about that. We're seeing signs of cracks in the economy. If you look at the United States, a couple of weeks ago, we had the retail sales, right? Retail sales saw a massive drop, a massive contraction in retail sales performance. If retailers are not doing well, their sales are dropping. What do you think that comes from? Where does that stem from? The consumer. If the consumer's not spending, where's the money? The money's potentially drying up. They're maxing out their credit cards. They're not having more money to spend. So of course, retailers, prices, their sales are going to be down. Right? So there's a number of alarm bells. And obviously, as I say, I'm going to save this for a really meaty video at some point. Now, if you look at the dollar here, in the latest week, we did manage to finish just about in green. Okay, just about in positive territory. There's a couple of reasons for that. Right? Now, remember I said last week, we want to keep an eye on signs of cracks in the economy for the United States. And we didn't really get that last week because we had the manufacturing and services PMIs both beating expectations, both higher than previous, which, threw a bit of a spanner in the works for markets trying to price in these rate cuts. Because remember, we need a worsening economic environment as well. But the fact that the manufacturing and services still doing well there was good. Allied with the unemployment claims, okay? less claims in the latest week, just 215,000 unemployment claims, which is also bullish. Okay, so that sort of threw a spanner in the works. Then we had Fed's Waller. Let me bring him up here. Waller, okay, an FOMC member Waller. And this is sort of a bit of a recurring theme right now. Okay, not wallets. I wanted Waller. FOMC Waller, here we go. Okay, so Governor Waller, he wants several months of good inflation data before lowering rates. Now, remember we saw the dollar losing its edge a couple of weeks ago, which we're going to talk about in a moment, because we saw signs of disinflation in PPIs, producer price index, and CPIs, consumer prices. All right, we saw the dollar losing its edge because we're seeing signs of potential disinflation, but he's sort of throwing cold water on that by saying we need several months of good inflation data, i.e. inflation coming down for several months before we start lowering rates. So he's just knocking the markets back a little bit here. And with him knocking the markets back, you can see here, look, in now September, remember last week, this was 60% probability that they're going to ease. It's dropped down to 49.4%. And look here in November, the odds have come down. The probability has come down to just 60% chance. This was like 80, almost 90. And in December, that was like a 90-something% chance that they're going to ease, and now just 81% probability. Okay, and so it's just that recent data, and then obviously Waller and other FOMC members is pushing back a little bit, calming the markets down on all these rate cuts that they're pricing in. If we look at the dollar technically, before we go into this week's fundamentals, as I say, remember we had this edge for the dollar here. If you look, bear with me one moment, I'm just trying to move my big fat head out of the way. All of this trend to the upside was because of good data from the United States and the inflation remaining sticky. That's why the dollar had edge over versus its peers. Now, in that latest week, a couple of weeks ago, we broke out of this trend. You know, we were trending to the upside here. We broke out of this structure, this ascending channel, because of that signs of disinflation. And now last week, I said keep an eye on this. Remember, markets don't move in straight lines. We had a big retest here of this channel, in which now we've sort of come for a retest and potential rejections, forming a possible bearish flag here, which is subject to downside. And obviously we need, and this is where technicals follow the fundamentals. I don't want to hear it the other way around. So we need the fundamentals to push this lower, okay, in order for everything to make sense. Now, if we go back to Forex Factory here, okay, let's just bring it up here. Forex Factory, there's data points to be aware of this week from the United States. Let's filter it out. Okay, bear with me. The internet here in Cuba is atrocious, so just run a little bit slow. Yeah, very slow indeed. Okay. So this week, all right, we're going to be keeping an eye on the Fed. The main thing, firstly, just going to jump straight to it, is the Fed's preferred measurement of inflation. Core PCE price index expected to cool down to 0.2% from 0.3. If that does cool, you know what's going to happen to the dollar there, right? We're going to sell off. Obviously, if it's higher, it's going to help the dollar continue to pull back a little bit on those losses. Now, ahead of all this, we're going to keep an eye on consumer confidence. If the consumer is not confident, right, the consumer's not going to be spending money, then the consumer makes up a big part of the economy. So we'll keep an eye on that. Richmond Fed manufacturing data, GDP as well, which is expected to come down understandably because we have seen a bit of an economic slowdown in the United States. Expect to come down to 1.3. If it does, if it's lower, dollar's going to come under pressure. Unemployment claim is expected to tick higher. More people expect to claim unemployment this week. Pending home sales expected to be a lot lower, right? If less pending home sales being there, what does that mean for the consumer? Well, consumers potentially not buying, understandably, maxing out credit cards, people in financial difficulty at the moment. And then, of course, the core PCE, right? Guys, with all of this stuff, obviously, we're just speaking about the dollar here. I go into a lot of detail in other pairs, in other currency, in other markets, because it's key, as I said before, about the economic literacy. We need to find opportunities elsewhere. We need to diversify. We don't just focus on one thing. We need to, once we've mastered one thing, we expand our knowledge and diversify and keep learning because there's opportunities out there globally, right, guys? So as I say, that knowledge cannot be taken away from you. You can't put a price. It's invaluable. This is invaluable up here for me. I'm so grateful for it every single day. All right, don't let that go over your head. Guys, other than that, have an amazing week. Stay lit, stay blessed. Let's get it.